Hey guys, so today was actually a quite difficult trading day, but I still managed actually quite well. And yeah, we'll make a quick trade breakdown. So as you can see, we will start as always on the daily chart. So right here, um, basically what we have today is a really bearish trading day. So actually I expected that we would break out of the range right here to the upside, but we just only scrapped the daily liquidity and traded down. And yeah, we opened up today. We had a high time frame gap lower, so a new day opening gap. And we have a really bearish trending day actually. So we have like basically also like yeah, equal daily lows right here, and we still have the inefficiency in here, so the higher time frame gap, which we actually want to see get closed in. So that's definitely a really good draw, and yeah, that's what we were basically expecting. So lower prices. Maybe we first I want to drop to the 1 hour chart, because actually what we have right here was yeah, so we were basically in a market maker buy model in here. So that's our yeah, that was our approach for the last days, and then we basically come up and swept the daily highs right here, but we could not basically break up or break out to the upside. We could not really continue a trend to the upside, and we yeah, traded lower. And after we basically displaced through the inversion fair gap right here, which was used first as resistance, then after we traded above it as support, and then we just traded once again basically below it. Now we are expecting once again resistance, so we are looking for lower prices. And what I want you to see is that we can basically fill in the higher time frame gap right here. So that's really inefficient. We want to see candles close within the higher time frame gap in here. And because we are in a market maker sell model, so we scrapped external liquidity, and now we basically approach yeah, the lows down here. So we are also looking for external liquidity, obviously. I don't think that we will get the low right here within like today or tomorrow, or maybe tomorrow, but yeah, that's, we don't have to hold for that. So we just were focusing on the high time frame gap. So let's drop to the 50-minute chart. What is important right here, so basically what's really interesting is that we were actually quite volatile within our Asia session, sorry guys, and we scrapped Asia highs within London, and London was basically our high for the day. We traded lower. We were actually respecting the midnight opening price quite well, so we reacted to it right here. We reacted to it right here. So first as support, then as resistance. Traded lower. We basically created also like a balanced price range with the up closed candle right here and the down closed candle right here. We traded back to it, found resistance also within the high time frame gap, and traded lower. So that was all happening basically before the opening. We scrapped Asia lows, also New York open kill zone buy sell liquidity untouched, and we just traded lower with 830. Scrapped London lows, traded lower, and right here we have 9:30 opening. So right here our AM session starts, and then we just, yeah, broke to the downside once again, traded all the way through the higher time frame gap. This is basically the 1 hour higher time frame gap, and traded all the way back to the yeah, big inefficiency down here to the big higher time frame gap, which we want to see basically candle close in, so that we trade basically through it, because it's still inefficient. There's no price action in or within the gap, so we want to see that happen basically. I think before we drop lower, I want first to show you regular trading hours. So what we had today was a bearish trending day to the downside. So 171 handles, that's basically really bearish. So we want to see NQ trade at least back to, or not at least, but we want to see NQ reach for the upper quadrant, and then basically continue with the trend lower. And as you already see right here, we had SMT, so we did not take out the high from 930, but ES did that. So I will show you right now. Right here is ES. And what you can see right here is basically that we had our 930 opening right here, and we traded higher. So we have basically, as we also like had SMT right here, but the higher, or the larger SMT right here is more significant, because with that we not only swap basically important buy side liquidity, but with that we would also trade back to the upper quadrant of the new opening range gap of regular trading hours. So if we would have basically taken out the high right here and just trade a bit high, we would have already reached the upper quadrant. Therefore, we can expect that we will trade lower with the trend to the downside, and basically also sweep the low right here. So now let's go back to NQ. I think we can basically just stick to the 1 minute chart. I will show you my executions, talk you through it. So what I was looking for today was basically lower prices, as I already mentioned. So what I was waiting for is that we had basically a short-term run on stops or a buy side liquidity sweep. We had that. We also had SMT right here, and then we had basically a break of structure with displacement. We had this breaker right here, and I shorted. And I just wanted to see basically that we will sweep the low right here, because it's just unfinished business. We don't have any short-term run-on stops in here. We don't have any engineered liquidity which got swept. So this low is really a high or a important draw for me. And I was really also targeting the daily sell-side liquidity right here, which is right here. And also we were basically aiming for the low of the huge high time frame gap, because if we drop back to the 1 hour chart, that's what I'm referring to. So that's right here, the daily liquidity, and we want to see the whole gap to get closed in. And so therefore I was expecting lower prices, but as you can see right here, I was trading against regular trading hours. So sometimes I'm content with that, because sometimes we can't really trade back to the gap at all if we are in trading conditions. We don't have actually always to do that if we are really bearish and we have a good setup. But in that case, I don't really think that was the best approach, because we just traded back to the high time frame gap, which was until then untouched. So therefore we can expect really big support coming in here. And basically because we had no short-term run-on stops with the low, this low is actually in play, and therefore that's basically the engineered sell-side liquidity which got swept, which is basically the short-term run-on stops. And then we have our market maker buy model, because we could not basically trade lower from here, we had to do it right here. And then that would have been actually a tradable trade. We could have entered right here after we broke above consequent encroachment of the breaker. We could have basically entered of the reaction of consequent encroachment and just aimed for the buy side liquidity right here, because that's not only the external buy side liquidity we want to sweep in order to have a market maker sell model to the downside, but also because our lower quadrant of the new opening range gap of regular trading hours is lying above the 930 opening buy side liquidity. So therefore we have basically two reasons to go up there. But as you know, I don't really want to trade market maker models which are only referring to a retracement, because it's quite often that we have, or that we basically form SMT, and in that case we did that as well. And that's just really not nice to see if we just look for higher prices and then you get SMT and we just break down when we just trade lower to the downside. So therefore basically shorts is the right approach, but it still took a long in here. Why? Because I was not really aware of the fact that with the SMT we would have traded back to the upper quadrant. So I thought, okay, we basically now have, I was aware of the SMT, Definitely, I now basically are more aware of the fact that I can't trade against a bearish S&T. In general, we can't trade against a S&T if we can't find any setup which basically trades lower. We can't trade. We can't trade. So because we we should not trade against the S&T. Therefore, we have to look for shorts, and if we don't find shorts in here, we have to just step away from the market. But I was looking for longs. I wanted to see that we traded back to the upper quadrant because I was aware of the fact that I was offside in here. But with the SMT, we did that. So we completed basically our regular trading hours approach, our objective for regular trading hours. And we also swapped external liquidity. Therefore, the market maker sell model is already in play. And we also have a smart money reversal because we have SMT. We are within the right time. We are quite after our 10 a.m. macro, and we also, more importantly, have basically it's CSD, so a change in the state of delivery. And what you can see right here is that we basically reacted also perfectly to the suspension block. We closed below it right here, traded just a bit above consequent encroachment, traded lower, and right here we traded perfectly to the low of the suspension block, expanded lower, closed below the bearish breaker right here, traded or closed above consequent encroachment, traded to the breaker, traded lower, closed above it, traded lower. So really good delivery in here. And that's what I realized. So I realized I was offside. The market maker sell mode is already in play. And now we can basically fill in the gap which we wanted to see in the first place to get filled. And also like the lows we want to target, which we basically wanted to target in the first place as well. Excuse me. So I was shorting in here. Looking for lower prices. I took my first partial right here because we had once again SMT with ES. Bit unlucky, but it's just what it is. We have to adapt. And then I think I got stopped right here, so I was looking for the low right here, but then I was like trailing my stop really tight because we were approaching 11 o'clock, as you can see right here. And also we traded really lower. We were almost at the end of the gap, so I just wanted to book as much as possible, especially because I was already having like 2 losing trades before. And as you can see right here, that's basically the reason why we want to be done with approaching 11, because after we closed with in the gap, we just consolidated in here. But I think it's a really nice trading day. I learned definitely a lot. I learned that that with SMT, or basically that we can't trade against the SMT no matter what. So if we can't trade aligned SMT, we just have to step away from the market, because I really often got stopped with trading against it, because sometimes I think we have SMT, but NQ will follow to the upside, but that's almost never the case. So definitely learned that. And also I think we could regard the S&T also that we traded back to the upper quadrant of regular trading hours, but I really like the short in here. I really like my targets, and right here we are also like trading aligned with regular trading hours because we traded back to the upper quadrant. We can now continue with the trend. We traded aligned with the higher time frame because we are in a market maker sell model. And that's basically it. So I ended up basically in green. So right here you can see balance before and balance after. So about $80 or something. Not bad for the day because I had like 2 losing trades, 1 winning trade, and that's basically it. I still have I still have something to learn. I think there's always something to learn, but I'm definitely getting better, and I think we will get there.